Right, but as we get an instant audit on this from Ron DeVary and Charles Payne, the estimates are all over the map. Jenna just put them on Twitter that the range is from -40 to +75, and some economists are even outliers on that, depending on which survey you look at. So they don't have any idea. I mean, that even makes it more uncertain, right, Charles, going into today, what's going to happen?
Yeah, because remember, we had Lindsay here on Monday, and she said 100,000.
Up or down?
Plus. Up. Yeah. So I sent her an email. I said, well, you guys are the highest on the street. And she said, no, there's several people out there more higher than them.
Yeah, it depends if you're looking at Dow Jones or Bloomberg or Reuters or whatever. There's a lot of surveys. But the point is, these guys are all over the map. But I've talked to economists. Actually, Lindsay's boss, Chris Lowe, is a good example. I was talking to him one day about it. I said, how do you guys figure this out? He said, there is no good model for forecasting the jobs number. You know, economists have all these models. Yeah. The jobs one is, it's kind of like, let me see here what number comes up in a lot of ways.
You know, it's not really the full set, and you know, it's about 165,000 companies that they're surveying, and you know, you got to look at, and you know, one big guy, you know, hiring, you know, X number is going to throw the numbers
So how do you prepare yourself for it? Because we got the European debt that we talked about for the first 10 minutes of the show today, and all these other issues globally that are kind of playing into it. And Charles and I were discussing: is it fiscal? Is it stimulus? How that politically is going to play out? And now we have unemployment in this country still, no matter what it is today, still an issue. How do you prepare as an investor for today?
You don't. You know, you don't try. No, you do not try to gamble on just one number, because that's the wrong way to. You know, you need to set yourself up for, if you want to buy volatility or sell volatility. This is a good time, because
speaking of which, did you see the VIX yesterday? Speaking of volatility, it was up huge, up to 26. Notices, I think, a 17 or 18% gain.
If you pull up a full-year chart of it, though, it's actually made a series of higher lows. It's gone like this. So you get these days where it spikes off the bottom, but it's gone down dramatically.
You think, though, things will pick up volatility-wise? Yeah, from when it hit 89 or whatever during the crisis, which was the high. But do you think volatility picks up now next few months? Tough to tell.
It's tough to tell. And, you know, to your point, like things like this jobs number. And listen, you know, how do you model for it snowing and you know, a couple of snowstorms that might have knocked things out of whack, put off a couple of construction projects, things like that. But you know, I think we may go through another period of anxiety here. I'm not sure what will pull us out of it, although if we can get a good number today and get through this jobs number, you know, what I do like is that we did see a couple times this week where the market was up, you know, where it now had triple-digit gains. So it tells me there's money on the sidelines that would like to come in if the sense is the coast is clear.
Well, we'll see about the market. Is interesting. I think for the country as a whole, we're going to go through an interesting period here, because we're essentially rooting for higher unemployment. We want the unemployment rate to go up so that people are interested, because they're only measuring people that are looking for work. Now, when that happens, say unemployment ticks up to 10.5 or gets close to 11%, all the headlines are going to say unemployment is going up, things are getting worse, and you know, psychologically, the nation's going to go through a tough time, because people, you know, it's not in their system to say, I want unemployment to go up.
It's all about
so that could really that could have another downward effect. No, I don't know.
You know, as a trader, what I think you would do is really you bet on, still buy options, and make sure that when the volatility ticks up, you make money. Right. You know, because there's a lot of things that can go wrong. And I think what
about as an American? Do you think that a higher unemployment rate, even though it's economists will say, we're going in the right direction, could that be a self-fulfilling prophecy to another kind of downturn in consumer sentiment and people getting upset?
I don't think so. No? I think you hit it on the head. You know, ironically enough, for the Obama administration, near term, if unemployment rates go up, it suggests more people coming into the job market, and that the average person, not the person watching Fox Business every day, but the person out there who just, you know, gets up and lives, you know, that they sense things are getting better. And so I think the irony is you kind of want that to happen, because they're not going to be swayed too much by
the numbers.
You know, by the numbers as much as, let's say, traders might be. But I think that that's one of the wild ironies of this whole thing. We want to see people stop dropping out of the jobs market. Yeah. Because to me, one of the big things, and I've echoed this all along since President Obama's come in, I think one of the things he hasn't been able to do is to generate a sort of confidence. In other words, I think he came in as somewhat of a savior, and a lot of people said, okay, this guy's going to get it done, let's watch him work. And since that didn't happen, and it can't happen, because we got to make it work. You know,
unrealistic
it's unrealistic that if people either say, okay, I've got to do it myself, I got to pull myself up by my bootstraps, or, you know what, I'm just going to bail out. And I think a lot of the ways we're seeing people bail out, and that's the intangible that I see missing.
You know, I think the feedback may end up being actually the corporations seeing those numbers saying that, whoa, I'm not going to do the hiring because the consumption is not going to be there.
Right.
So they actually, instead of thinking about the sentiment of the consumer actually getting negatively affected, is the planners saying that, if everybody hires at the same time,
right.
then everybody goes to work, everybody has more money.
Yeah,
it's the psychology of getting the market back on its feet. So I think
who's going to take the plunge, so to speak?
Yeah, I think if we get to 11%, I think that would actually be a serious
but we
negative
really
on the market.
Officially, unofficially, we are at 11%.
We're at 18.
Oh, yeah. If you count everything.
If you take November, the amount of people in the job market on November,
it's not the reality, it's the perception of reality that affects our emotions.
Well, our reality is it's 25 after the hour, and we actually have to move on here for a second. But thank you very much to both of you guys. And I want to talk a little bit about what the President